Art, thanks so much for joining us.
Happy to be here. Thank you.
So I want to talk about what you're looking at about the nature of work and some of the ways in which technological advancements may be setting us back in certain ways. But to get there, and in order to get there, I want to kind of give people an idea for where you've been and what led to these revelations into these solutions. So let's just start at the very beginning in terms of how did you get into the financial industry?
Well, it's funny. I was just telling that story the other day. Someone was asking me. When I was 16 years old, I got my first job. And my father had gotten me a job as a summer intern for a small Wall Street, although very famous Wall Street brokerage firm called Spingarn Heine and Company. This was 1969, and I went to work there. This was boom days on Wall Street, and my job was to be a runner. Back then, they didn't have all the digital, and so you carried checks between firms and securities between firms. And the way I remember it, I was the youngest runner, I think, by 50 years. I think the next youngest guy was about 66 years old. Anyway, it was a fabulous 2 months. It just opened my eyes to a world that I really didn't know anything about. And I came out of that summer saying, I want to go to work on Wall Street, when I'm done with college. Subsequent to that, Wall Street crashed, and so my father actually tried talking me out of the idea of wanting to go to Wall Street. But
what did he want you to do?
Well, it just, he was a businessman, so it wasn't that he didn't want me in business. It just Wall Street he thought was a problem. But anyway, I didn't listen. And so what happened was when it was time to apply to college, I actually applied to the Wharton School at the University of Pennsylvania, and they admitted me. And that was, that's how it all began. And what happened is that I actually knew over time, and I don't remember how this was, that I ultimately, from a Wall Street standpoint, I wanted to become an investment banker. And, wasn't interested in the sales and trading side, but more the financial advisory type side, merger and acquisition. And that, I don't remember how that got into my head, but that was, when I was attending the Wharton School, that was pretty clear to me.
And then, so we fast forward a little bit, I don't know how long, and we find ourselves at Drexel Burnham as that firm was becoming, it must have been the fastest growth for any Wall Street firm in terms of the amount of profits generated and the amount of change to the financial industry.
Well, let's go back a little bit first, because there were some other critical points before Drexel. The one thing I didn't know until the summer of between my sophomore and junior years at Penn, I had a summer job at the Chase Manhattan Bank, and I was working for an international VP there. And at the end of the summer, he took me out to lunch. He says, Art, you're great, and the Wharton School's great, but I got bad news for you. You can't get a job as an investment banker in today's world without an MBA. And I said, oh. Now, it's obviously not like that today. Today, you have analyst programs in all these firms, but there were no analyst programs back then. And so what I did is I said, okay, I'll go get an MBA. But I was going to finish Wharton. So what I did is I actually shifted much of my curriculum to liberal arts, electives in liberal arts curriculum, although the requirements for Wharton I did take, because I didn't really feel like duplicating my,
Got it.
And I literally I graduated from the Wharton School in May of 75, and I started the MBA program at the University of Chicago in July of 75. I literally just drove from Philadelphia to Chicago. Got my MBA at the University of Chicago, and now I was qualified to apply for an investment banking job and applied to Drexel Burnham, as well as a few other places. And Fred Joseph, who at the time was running corporate finance, and at this point, Drexel was unknown. And Fred, who went to Harvard undergrad and Harvard grad, everyone in the 3 years before me that he hired, I think, went to Harvard. So the fact that he hired me from the University of Chicago, I even said to him, what happened? Everyone from Harvard turned you down? Anyway, so I think there were 3 of us that joined that year. And so I joined Drexel in summer of 77. And originally in New York, in the corporate finance area, and then ultimately moved to California very early 80s.
Did you have a feeling while you were at that firm that we are changing the financial world around us? I mean, what was it like, day to day, week to week, being inside such a, growing and influential company?
Well, at first, it didn't seem like we had much influence at all. Yet didn't have any business. But I'd say in 78 is when, I think in 78, we did our first junk bond financing. New issue financing. We were doing a lot of, I remember when I first joined, we were doing a lot of debt restructuring work because Mike MILKEN was already, at the firm business and trading a lot of the, broken down securities out there. So actually the first thing I ever worked on was the restructuring of the debt of an REIT. And what was interesting is it owned all kinds of trailer parks in the southern part of the country. And I had to go down and do due diligence in Georgia and the panhandle of Florida. And I grew up in New York. I'd never seen a trailer park. I've since seen many. Anyway, but it was 78 is when I think we did our first new issue bond deal. And that's really where the momentum began building. And then through 78 and then 79, 80, 81 really started becoming a very significant product on Wall Street in general, but Drexel, dominated that business. There were other firms who did some, but Drexel truly dominated. And it was also, think about it, it was a financing vehicle for enterprises that really didn't have much in the way of alternatives. So it wasn't just that we, built a great business for ourselves, but we really enabled a lot of other entrepreneurs and others to build incredible businesses that they might have had a tough time getting financing for.
Now, did your friends from Wharton and UChicago say, "What the hell are you guys doing? You can't do this. This isn't how Wall Street works"? Or
no, because matter of fact, one of my closest friends from Chicago, he initially, got out and went to work at another firm, and he was on the sales and trading side. And after a short period of time, I said to him, one of these days you'll get smart, Leon, and decide to come to work at Drexel and go to work for Mike MILKEN. And he actually eventually did. I think it was about 4 or 5 years later. But no, I think people were intrigued from pretty early on.
What was it like working with Mike MILKEN in the 80s?
Well, it was fabulous. You had to, a story, it's actually written up, I think, in some Drexel books. I learned very early on that, if you want to get ahead and get ahead with Mike, you got to play the game. And so there's this truly happened. At some point, I'm now living in LA, and I'm waiting for Mike. He was in a meeting for the end of the day for a couple hours, and I forget what deal it was, but we had to make a decision on something. It was a very time-sensitive decision. And he comes out of the meeting about 6 o'clock, and I'm waiting. I said, "Mike, listen, we got to sit down. We got to talk this through. We got to figure out what we're going to do on this." And he said, "Art, look, I really apologize, but Lori and the kids," Lori's his wife, "Lori and the kids are waiting for me. I can't be late. Can we meet first thing tomorrow morning?" So I said, having played the game, I said, "Okay, no problem." I said, "What time would you like to meet?" And he said, "Could we meet at 4:30 in the morning?" And I said, "What am I supposed to do between 1 a.m. and then?" So working with Mike was a true experience, learned obviously a tremendous amount. Also, Mike introduced all of us. He really became a magnet for a lot of pretty interesting people out there. So a lot of the interesting introductions and ultimately relationships that I developed over time, a lot of them were original intros by Mike.
I think we all kind of know what eventually happened at that firm, but from someone inside, I mean, what was that like the last years there at Drexel Burnham?
One, it required a lot of change. So it was 86 when the first news broke. At the time, I was in LA, and a fellow named John Kissick ran corporate finance in LA, and I was his number two. From the time I moved out, when it was John and me, we were now up to, I think, like about 89 investment bankers in just Los Angeles. Forget about, when I joined the firm, in 77, I think I was the 21st or 23rd investment banker in the firm. We got up to probably 600 investment bankers by the end. Anyway, what happened was when we still kept doing a lot of business. I don't know that it really hurt business to any meaningful degree. What did hurt business a little bit is the stock market of 87 did influence a lot. But then we had to start thinking about what might happen. And I guess it was 89, I think it was 89 when Drexel finally, pled guilty. And it was as a result of that, that's what really caused the unwinding of Drexel. One, Mike, pled guilty and had to go off to prison. What happened when Drexel pled guilty, the banks started pulling our lines of credit. And so, the economics of day-to-day sales and trading were becoming impacted. So, and that was 89, and that's why finally, February of 90, we went out of business. But we kept doing a lot of business, and I will tell you, the spirit of the people were quite good. I mentioned Kissick because what happened is when Mike had to leave the firm, John Kissick moved over to the high yield bond department, and he sat there from an administrative standpoint. I became head of investment banking in LA, and Fred Joseph, who now is the CEO of the firm, he had me, Leon Black, and a fellow named John Sorty in New York become co-heads of the corporate finance area out there. And Leon was running the M&A group, I was running LA, and Sorty more the generalist stuff in New York. So
before we move on, I'm just curious, looking back now, do you think MILKEN's gotten a bad rap in the public imagination, and maybe Drexel Burnham's gotten a bad rap? Do you think that the perception of Milken as this criminal, running this big criminal enterprise? I mean, I guess you saw, you were there, you knew everything that happened. Now I think his perception is around his conferences and that he's doing a lot of good things in the world. But I'm just curious what it's like to have been there and now to see from the sidelines people talk about, Milken became one of these figures of Wall Street greed is in the pantheon of these people like Madoff. I guess what do you make of that?
I guess I'm biased, but
right.
I think it was fairly unjust what happened to Mike in that, yes, I'm sure he did some things wrong, okay? I wasn't there into the detail, but I'm sure there's some things. But there were a lot of things done all over Wall Street that had never been criminalized. And criminalizing some of the stuff that the junk bond department and Mike may have done, as opposed to it being civil litigation, I think that's one of the things that was unfair. Yes, it then took Wall Street beyond that. And yes, it became aggressive with a lot of figures on Wall Street. But I do think Mike was, and I think part of it was because to be honest, he and Drexel became so powerful.
Right.
And we really controlled what now was a multi-billion-dollar market. And I suspect there were always rumors that some of the pressure put on the SEC and the government may have come from competitors on Wall Street who just were trying to compete for this incredibly lucrative business, but were having a hard time. I wasn't part of the conversation, so I don't know for sure, but that clearly was the rumor.
And just one more thing is, does it make you look at, Wall Street regulation has been really one of the big news stories over the past, 12 years. Does it make you look at the new wave of Dodd-Frank and the way that regulators look at these firms? Does it make you look at all that differently, having seen the regulation, the start of the regulations get created ad hoc, as you say?
Well, I do think regulation's important, but we're also living in really a totally different world today, from global markets and things like that. And so I guess one might argue that regulation's more important in a world that's, spread literally from, around the globe and so many different players. And also given the pace of what happens, so much of it is automatic now. As I started my story, and when I was 16, I literally carried securities and checks. In today's world, it's absolutely instantaneous. And a lot of it, and this is something else I'm deeply involved in, but a lot of it isn't even about human beings doing stuff. So much of it is about technology and data and analytics and things like that. So I'm not opposed. I'm not opposed to regulation, but let's make sure we keep the efficiency of the markets. Allow value to be created.
Sure. So resuming the story then, tell us about the beginnings of Apollo.
So we ended February of 1990, and I think Leon Black, who I worked closely with on various things, including co-heading the department at that point. Leon, I think, was out in L.A. visiting family in April of 90. We had breakfast together, and he said, "Art, if I can pull together a pool of capital, would you be interested in, partnering with me and starting up a private equity fund?" And I said, "Sure." And then, I don't know, Leon and I hadn't talked for a while, and then all of a sudden one day he called me, he says, "Art, I think I got $800 million coming our way." And I said, "Great." And I think we actually launched Apollo officially July of 1990.
Tell us about the initial strategy that you came into Apollo with and how it went from there to, again, the runaway success of Apollo.
Right. Well, two things really influenced our strategy. First was, as people will remember, the early 90s, we went into a fairly significant recession here in the United States. The second thing that happened is the primary market maker, and the party that had really, I won't say controlled, but had dramatic influence over the junk bond market had disappeared. And so the whole junk bond market just really went into a tailspin because of the combination of those two things. And so where we started, and for the first 4 years at Apollo, our whole business wasn't, buying, private equity, buying up, some company and leveraging. It was actually buying up the debt of bankrupt or near bankrupt companies because we were able to buy that debt so cheap because Drexel was gone and the economy, and then work those debt holdings either through a bankruptcy process or otherwise through negotiation to end up with significant ownership positions in those companies that we liked or even control of those companies. And if you think back, the first thing that I worked on in 1977 when I joined Drexel was the debt restructuring of an REIT. So, I was just back to
the trailer park.
Back to the trailer park, exactly. So that was our business for really the first 4 years.
Can you, just to give us a better idea, is there one company in particular or one thing that was an early success that kind of set the stage for the rest of what you guys were doing there?
Obviously there was a small group of us in LA, and then Leon and others were in New York. So we did a lot of different things. The ones that I could highlight are the things that I worked on. Good example is Telemundo. It was in bankruptcy. You live in LA in 1992. You didn't have to be a genius to know Hispanic broadcasting might be a big opportunity. So we bought up a significant, not a majority, but a significant portion of Telemundo's debt. And I was chairman of the creditors committee. And from 92 to 94, worked through that whole bankruptcy process. And then we and other parties that we were close with ended up with, basically significant ownership, if not control, of Telemundo. So it's a good example. I did that also with another TV broadcasting company. And guys in New York did it with another TV broadcasting company. And that was very monumental in terms of what we did for a number of reasons, which I'll explain, but also in terms of my life, and also what we'll ultimately talk about in terms of Working Nation.
Right.
We had bought up the debt of Taft Broadcasting, or majority, a significant portion, and again, I was chairman of the Critters Committee. Guys in New York bought up the debt of Gillette, George Gillette's company, which had one or two broadcasters in it. And then what we did is we took those two through bankruptcy, and then we took those two and one healthy company, broadcaster, merged them all together. And this we did actually with Ron Perlman of Revlon fame. And we put all three companies together. And then courtesy of a $250 million check from Rupert Murdoch, we changed all the affiliations, and they were largely CBS stations. We changed all the affiliations to Fox and created the largest Fox affiliate group. Now, we were not New York, LA, Chicago, but we were Tampa and Atlanta and Dallas and Detroit and Cleveland, St. Louis, et cetera. And so we became the largest Fox affiliate group.
Now, how do you find that opportunity? Because it strikes me that if you're looking out at companies of debt you can buy, it takes so much foresight and business strategy and specific understanding of the television broadcasting space to say, oh, here's some debt of this company that looks like it has a horrible balance sheet, and then all the steps that it takes and the strategy that it takes to sell that to Rupert Murdoch down the road. I mean, I'm just curious how that worked internally. It just seems like such a massive effort and something that'd be hard to even plan out.
It was a world that we knew quite well. I did a lot of media stuff, as I like to tell the story, because it's true. In 1985, I met a very interesting guy. Mike MILKEN actually introduced him to me, and his last name was Turner, first name Ted. And I became investment banker for Turner Broadcasting. And so did a lot with Turner in buying MGM. I actually was the one who figured out, sitting in a ballet one night, I think it was 88, with my wife, and so my mind was finally relaxed, and figured out how to get $150 million into CNN, which was about to go bankrupt. I was the one who brought Ted.
It's a good thing it was a boring ballet, I guess.
I was the one who brought Ted Hanna-Barbera so he could start the Cartoon Network. This was post Drexel. This was now Apollo. We at Apollo put up the money to start for him to make that acquisition and start the Cartoon Network. And then, as I said, I did television. So I had done, and I did a lot of others also. Those are probably, Turner is probably the most notable of them all. So we actually had quite a bit of knowledge within the firm about the media and the broadcasting world. So I don't think it was all that hard. Plus, we really did understand how broken the bond market was. We weren't having to pay, 90 cents on the dollar for this stuff. This stuff, we're buying it at 40 cents on the dollar, and we knew there was no way. So we had a pretty big, we could make a fair number of mistakes and still make plenty of money.
Right. So now tell us about how you left Apollo and eventually found yourself in the technology space, really.
No. Well, no, there was one.
I'm skipping
There was
a step
another broadcasting piece. So what happened was in '94, we were going to go raise Apollo 3. And I finally sat down with Leon and I said, I think I've had enough. One, you're going to go raise a new fund. You're going to get locked in for 7, 8, 9 years. And effectively, I had done the same thing for 17 years, between 13 at Drexel and 4 at Apollo. And I just didn't want to do it for another 7, 8, 9, 10 years. And, obviously I probably left a couple billion on the table by doing that. But Leon and I worked out a deal that I'd maintain my ownership interests in everything we had done before. I wouldn't participate in the next fund. When Ron Perlman heard that, he asked me to go and run the TV broadcasting company that we had created. And that is what I did. I went in and ran it for probably about 2.25 years. So I literally, ran something.
Yeah, so we touched on your expertise of what you learned in the media space, but how was that different actually running a business versus finding attractive opportunities?
It was definitely a challenge. Yes, I knew a lot about broadcasting, but just the daily operations and having and we had quite a bit of international assets also. We had control over a fair number of soap operas that we would sell abroad. But then, we had these stations. We also had a number of NBC stations as well. Those we didn't convert. But, all the legal stuff that went on and all the sales, and I had to learn a lot. It's one thing to do deals. It's another to sit there and operate day to day.
What was the hardest lesson that you learned in starting to manage a business?
Because I had so much to learn, and because of my nature, I would really try to really learn each aspect of the business. Well, that made for very little sleep time. I also, I've always traveled a tremendous amount, but I was also, traveling quite a bit because I was going around to the stations around the country, frequently. The other thing is we had some very notable, people, I was a novice at all this, but the guy who ran all of our content, development side of our business was Brandon Tartikoff.
Oh, wow.
This was Mr. NBC.
Yeah.
And so, Brandon and I spent a fair amount of time together. But it was interesting. I was the only one who could green light a TV show. So that was interesting.
Well, I mean, what was that like? There's Jack Welch has a story in Jack Straight from the Gut about how that TV development, he said, is like the hardest thing he's ever done, because everything else he was just able to apply the Six Sigma approach and look at it, very, very cleanly. And TV development was like, that completely failed.
The fact is, the reason I was the only one who can greenlight a TV show, Ronald, Paulo, et cetera, and this was we had created a public company. They all wanted it to be a broadcasting company. They did not want to be producing TV shows. But, look, Brandon was there. If some good idea comes up, maybe we'll do it. But we clearly, Ronald Perlman had already lost a lot of money in the TV producing world when he had bought New World Communications. By the way, the name of this entity that I ended up running was New World Communications. We merged his entity. But Ronald had already lost a lot of money in TV production, but broadcasting, much more stable, type of business, and that's what we really wanted to keep it at.
So now we go into the technology sphere from right there to Akamai, or?
So what happened was, finally, about two years later, Rupert shows up again. This time with
Ted Rupert. I love you're on the first name basis with these guys.
Shows up with an even bigger check, this time to buy our whole company. He decided, what do I need? Art, Bilger telling me, my guys, what they can do, what they can't do. And so he showed up with a very large check, and we accepted it pretty quickly, and had to wait for, government approval. And then shortly thereafter, I left. He didn't need me. And I spent the next year and a half looking for what I'll do next. And I looked at some pretty interesting things, again, in and around media. And then total fluke. I was at a charity board meeting in September of '98 in LA that I was on. I was actually quite involved. And a guy leans over and says, Art, you're not doing anything. I'd like you to come to Cambridge and meet the smartest human being you'll ever meet in your life. And I said, sure. And next week I got on a plane, flew to Boston, went to MIT, and got a whiteboard session on how the internet worked and how this professor and his student were going to remake the internet so that it would be much faster, and ultimately you'll be able to watch heavy content, as you can do today. I didn't own a computer. I'm not sure if I knew what the internet was, but I got a whiteboard session from, again, another amazing individual, a fellow named Danny Lewin, who was the PhD student and the young founder of Akamai Technologies. His professor, Tom Layton, was other founder. So that's how I got to Akamai.
Did you intuitively grasp the importance of what they were doing? Because when I read accounts at that time, it's a lot of, there were a lot of interesting technologies being developed, but the internet was not one of them. It was seen as like, something else that's going on. Did you understand at least a little what, why what Akamai was doing could change the world, or?
The answer is yes, to a degree. Let's not go crazy. To a degree, yes, because of what I had just been doing. If you think about the TV broadcasting world, there's a network, and distribution is done locally. That's effectively what Akamai was going to do. Akamai was going to put servers all around the globe, and then with algorithms, you could put up content, at your house or some news organization, whatever. It gets pushed out to the local servers, and because they're local, close to people's homes or businesses, the content would be available so much faster, and thus you could put much heavier content out at a much quicker rate. So the logic, that was the connection. The idea of local distribution, that I learned at that New World. What happened then is Tom and Danny got very interested in me getting involved, not because of my technology brilliance, but my ties to all the big media companies, as well as my ties to money in Wall Street.
Sure.
And so I became, when we did their first round, the Series A round of financing, I was one of the original investors, and I actually became vice chairman of the company. And I got very deeply involved. I was probably flying to Boston every other week for the next 2 or 3 years. Got very deeply involved. One, tried to learn as much as possible, but two, then I was the one who walked them into CNN. I'm the one who walked them into Disney and Paramount and Warner, et cetera. And then I learned a tremendous amount. And Danny Lewin was one of the most amazing people to ever work with. And Danny and I had developed a very strong relationship. We worked very closely together. And the unfortunate punchline is the night of September 10th, 2001, I had dinner with a guy trying to recruit a new head of sales to Akamai. Tom and Danny were, I don't remember all the details of it, but we had, through a cousin of mine, I had met some guy who could play that role. We sort of screwed up with this guy a bit. Anyway, I had dinner September 10th with this guy. Over dinner, he says, "Okay, I'm in," or "Yeah, I'm willing to, talk, positively about this." I emailed Danny that night saying, "When are you arriving in California?" Because I knew he was coming out. Didn't get a reply. The next morning, I get a call from one of the other founders telling me that American Airlines has not confirmed it yet, but Danny was supposed to be a passenger on the Boston-LA flight that ultimately crashed. It was the first flight to crash into the World Trade Center. About an hour or two later, they called me back saying American Airlines had confirmed that Danny was on the plane. Danny was the first person to die on 9/11 because, no, he didn't die in the crash. Given Danny's background, it won't be surprised, it's written up in the 9/11 papers, Danny took on the terrorists on the plane, and I believe one came up from behind him and stabbed him. Danny had been born in Denver. Family moved to Israel when he was about 13 or 14, went through high school, didn't have to go into the IDF because he was an American citizen, but that's not who Danny was. Danny became the captain of the most elite anti-terrorist unit in the Israeli army, the Sayat Makal. When he was done with that, he ultimately went to the Technion. When I've talked to people at the Technion, they'll tell you, the Technion being the MIT of Israel, they'll tell you Danny was a standout amongst all standouts. Then I said Danny's founder of Akamai and first person to die on the world lost. He was 31 years old. Wow. The world lost. I often think about what would Danny be doing today in this world that we're living in today. So that was a pretty influential. Danny was very influential on my life, and that then led me into the tech world, and then I began doing venture capital investing in a lot of different things.
On a human level, though, what was it like for you and the other people at Akamai to kind of deal with that tragedy and go on working on this vision that he helped create?
Well, we all got together and agreed that we would, stay involved. I remember they asked me, "Art, please, stay involved," and because Danny and I were quite close, and I agreed to, stay involved, and we worked very hard. And you talk about cycles. This may be the most unique stock valuation cycle in the history of the world. This may stand out all by itself. We raised the first round for that Series A round. We raised $11 million. We raised $8.4 million at $11 million pre-money valuation. 3 months later, I raised for the company $20 million of notes and warrants, an old Drexel Burnham type currency, where the value of the equity was struck at $150 million.
So when was this?
This would be now March of '99.
Wow, okay.
In April of '99, I was sent off to meet with a guy in Silicon Valley who first he wanted to buy the whole company. We said no. Wanted to buy 25% of the company. We said no. I was there to tell him he can buy, or his company could buy 5% of the company. Plus, we want a $16 million revenue contract. These would be the first revenues at Akamai for an 18-month period of time. The guy looked at me. He says, "What's the valuation on the equity and the warrants?" And I said, $250 million. And he looked at me. He said, "You just sold equity at $150 million a month ago." And like a dummy, I said, "We had a good month." Anyway, he jumped out of his chair, started screaming at me, black turtleneck and all, because it was Steve Jobs. But he agreed to do the deal. So the next 3 months later, we sell Cisco 5% of the company at a total valuation with the company of $1 billion. So Steve now had done pretty well in 3 months. Right. We then, 3 months later, sold Microsoft 5% at a $1.5 billion valuation. 2 months later, we took it public. The initial pricing was at $2.6 billion. That day, it closed at $14 billion. It traded as high as $34.5 billion. And in October of 2002, the Akamai stock traded at a total equity value for the company at $57 million. From $34.5 billion to $57 million. And the incredible thing is for a company to survive that, and the fact that Akamai today is a real company and a key part of the backbone of the internet. So that was a pretty amazing story, and I lived through all that.
What could that have been like inside the company?
Well, there was one thing, and I'll take credit for it. There was one thing that gave us the opportunity to survive. Again, the Drexel influence. When the stock was at about $20 billion, when the company's value was at about $20 billion, I went to the board and said, let's do a convertible bond deal. And let's go raise $300 million in cash. And we actually did that. And so a key reason that Akamai survived is we were sitting with hundreds of millions of dollars of cash, even though we weren't a particularly mature company yet, but we had the cash to survive that cycle. And then a lot of it took, obviously then management, human resources and all. It was a pretty tough environment, but it was a terrific group of people at the company, both employees and board members.
But for early employees to go from, being given these shares and to become a multimillionaire, 100-millionaire, perhaps some became billionaires, and then to lose it, while you're still working at this company in such a short period of time, it just must...
Literally, well before, the crash, I remember a board meeting, it was January of whatever year, I was hooked in by phone. I was in LA, I couldn't make it to Boston for some reason. And I really started pushing hard on the management to advise the employees to not look at the value of their holdings as real. Don't go and buy some very expensive house and put a giant mortgage on it,
Right.
because I promise you, this value won't be there. I remember the original receptionist at Akamai, at one point her position was worth like $10 million. And management did, really tried to keep employees from losing sight of what reality was. And so we had a great management team. They did a very good job.
From there, we get to, I wanted to talk about Working Nation, which is what you're working on now. And I think now people can sort of understand the scope of the experiences you've had that have led to it. So tell us, first of all, what Working Nation is and what the problem is that you've identified.
Working Nation is a not-for-profit media enterprise to educate the people of our nation as to what I believe is the most significant issue we face, and that is a potential massive structural unemployment. But then the center of the bullseye of our mission is to then educate people across this country as to where the jobs of the future will be and what are the mitigating strategies and solutions. And I really do believe this is, coming on much faster, and there's clearly more understanding today than when I first started thinking about this. This started coming together in my head 5.5 years ago. But I'm still amazed at how little understanding there is. But also, so few people are really talking about solutions. And so the two words that are associated with Working Nation to the greatest degree, and it's pretty unique, is one, solutions, and two, storytelling. The slope of the curve of the change in jobs and skills when measured against time has never been so steep. And my belief is we can't wait around for conferences and white papers to educate the people of this country. And in today's digital world in particular, the power of storytelling is very powerful.
So let's start with the problem as you see it. I guess where in your career did you start to be aware of the what you call it, the potential massive unemployment caused by technology? When did you become aware of that, and why did you think it was such a concern, really?
Well, it was really the entry into the Akamai world, and then my active involvement in a lot of venture capital type stuff after that. I wasn't just a passive investor. Anything I'd invest in, I would play a reasonably active role. And so I got a very good look at how fast technology was changing the world that we were living in, and one of the things being jobs. And so the fact that this all came together is not that crazy. I was watching it. But the other thing, and I'll add, really the third leg on the stool. So I've talked about my media experience. I've talked about my technology experience. The third leg on the stool that helped bring this all together in my head was in 2002, Mike Milken came to me and asked me if I would invest in an online education company that he and his brother and Larry Ellison of Oracle were launching. And I looked at it, and I finally said to Mike, I'll invest, but only if I can go on the board and on the executive committee, because I have no idea if I'm going to make any money, but I want to learn about this. And the reason is I was already thinking about the idea of education and technology, because my kids were going to the finest private schools in Los Angeles, and 5 miles down the road, you can find a very different circumstance. And so I was, due to my Akamai experience, and so I said, okay, there are platforms out there that what my kids are getting exposed to, others could get exposed to via technology. So, as I said, I was already thinking about it. Mike was approached me with the first one. I did go on the board and on the executive committee. I was very actively involved and stayed on the board, I think, about 6 years. I dropped off the board like the week before we filed to go public because I didn't really feel like being on another public company board. That opened up me to a lot of education technology investing over the years. So it's really those three: media, technology, and education, which really came together by head and started about 5.5 years ago. But I've pretty much spent the bulk of all my time ever since then focused on it.
So I guess the naive question would be, well, unemployment is lower than it ever has been before, besides maybe World War II. So, what's the problem that you see about the problem looming about unemployment, and then how bad do you think that could ultimately be?
First of all, the numbers you're referring to are totally misleading.
Okay.
They're not representative at all. The workforce participation rate is at one of the lowest levels that it's ever been in. And if you're not a participant, if you haven't looked for a job within some period of time, you are not counted in the denominator.
Sure.
We're sitting with millions of people who are either not counted or are considered to be employed, but they're not fully employed. That individual who used to work 40 hours a week on some assembly line, and all of a sudden that assembly line's gone, and now they're working 20 hours a week, driving Uber or whatever. They are considered employed. And so the 3.7 or 3.9, I don't know what number they're talking about now, is totally misrepresents what the reality is out there today.
Your concern more around automation and assembly line jobs, these kinds of even the jobs of drivers with driverless cars. Is that what's causing that slope of that curve to be so high?
There are really four variables coming together all at the same time, like never before in history. First is globalization. Okay, globalization is good in terms of demand for product, but also you got workforce out there that becomes available. Second being technology, and we've talked artificial intelligence and all kinds of other technology. Third is longevity. If we keep people alive longer, you're keeping units of labor in the workforce or available for the workforce for much longer. And then the fourth variable is broken education, particularly when you consider education given the other three factors that are having such dramatic influence. And so it's those four things coming together like never before in history is what underlies, I believe, one, the slope of the curve, and the other, two other things I want to highlight in terms of what really motivates what we're doing. This time it's about the heart of America. Yes, it's also about the bottom 20%, but this time it's also about the heart of America. And the two examples I've used for years is the driverless vehicle. I've been using that example for probably over 5 years. I think driving for a living is like the #1 job in 32 states in this nation. Those are middle-class jobs. Right. And I don't know if it's 5 years or 10 years or 15 or 20 years, but those jobs are going to be disappearing. The other example I've used for a very long time, because this is an area I'm very deeply involved in, is how a marketing department of 20 will become a marketing department of 2 because of data and analytics. And those 8 jobs disappearing are excellent white-collar, middle-class, and upper-middle-class jobs in New York and LA and Chicago and throughout the country. And data and analytics is literally going to have that type of impact on so many different, I believe there won't be an aspect of business, government, or the not-for-profit world that isn't driven by data and analytics. That's the bad news in terms of jobs being lost, but I actually also believe data and analytics jobs will be the fastest growing job area in this country. Mm-hmm. And just to go back, I'm the founding my wife and I are the founding funders of the Wharton School's whole data and analytics program. This dates back to 07, 08, when I sat down with the then new dean of the Wharton School, and I had never met him before. He was a marketing professor, and I said, Tom, I used to be in the business of selling bad data. And he looked at me strangely, and I said, I used to run a TV broadcasting company. The data was bullshit. The advertisers knew it was bullshit, but that's how we sold advertising and priced advertising. And I said to him, within the next 5 to 10 years, we will be able to match a single individual with a single piece of content, with a single economic opportunity, and it will all be data-driven. And if it's data-driven, shouldn't the Wharton School jump on it? And to Tom Robertson's credit, he said, let's go. And about 8 months later, we launched what today is called the Wharton Customer Analytics Initiative. And it's all about data analytics in the consumer world. And then the Wharton School has since, took a long time for them to get there, but launched a major in data and analytics in September of 2016. Mm-hmm. And of those, both the MBA and the undergrad level, and of those students who have had to choose a major since September of 16, 30% have chosen data and analytics. And the lead professor, when he announced to the board, I remember about a year ago, he fully believes within 3 to 4 years, data and analytics will be a bigger major at the Wharton School than finance.
So this leads us to the solutions that you see to this problem. Is it around educating people and just changing the education system, or educating people around the right industries, or?
Well, it's first highlighting what will be the jobs of the future. And yes, data and analytics is obviously a big area. Listen, healthcare is the biggest industry in this country. Healthcare jobs are going to grow. They're going to change dramatically, but they're going to grow very dramatically. A lot of it, the aging of the population, just being an example of it. I believe the not-for-profit world will be a big growth area, unfortunately. A big growth area from an employment standpoint. Cybersecurity jobs are going to grow tremendously. So our team at Working Nation, and we've got an incredible team of really experts, our first job is really searching out where those jobs will be and really engaging with all kinds of think tanks and other really very knowledgeable organizations, people, and then figuring out where are the solutions. Mm-hmm. And we are very focused on the fact that solutions are local. Corporations, not-for-profits, academic entities, and local government. What they are doing it's not to say federal tax policy and budget policy can't have influence, but the solutions themselves are really at the local level. So what our team has been doing, and we've really been up and running with researchers and others for probably about 4.5 years now. We are searching for those solutions out there with the goal of then telling the story of those solutions through the people who have gone through those solution type setups.
Not having a job now in the United States is very different from not having a job in the United States 200 years ago when you literally might have starved to death or died of hypothermia or pick a reason. It reminds one of the Keynes remark that, in the future we'll all work 8 hours, and, maybe driving an Uber for 8 hours a week, you could have all the comforts that they had when Keynes was writing that. So I guess, and this is part of the universal basic income idea that, well, we're making so much money now, we can just kind of give people money to deal with. So I guess, I'm leading the witness here, but why is that not the approach you're taking to these problems?
I am confronted frequently by the universal basic income concept. Mm-hmm. When I'm sitting and having breakfast or lunch with someone, that's the solution. My response from day one is, one, I have no idea how you pay for it. But two, very importantly, it leaves out, I think, a very important piece of the equation, and that is the linkage between employment and purpose in life. I started thinking about that probably about 3.5 years ago when I started thinking about my own life. And putting aside dollars and cents, thought about all the different things I did and the opportunities to work with Mike Milken and Ted Turner and Danny Lewin, et cetera. That was pretty motivating. I probably would have done it even if I wasn't paid, but good, I got paid. And so then I started, and that actually started, I was up in Palo Alto at a think tank up there that I was talking to about this. Someone said something that caused me to start thinking about my own life. So then I next started thinking about the assembly line worker. And to what extent is their employment an important piece of their purpose in life? And after talking to some people and all, I ultimately concluded they too. They show up for work, they're working with friends, compatriots, they're producing something, they're bringing home income to feed and educate the family. They're part of a community. And so I said, okay, it's different than my life, but I said, I really think there's a tie. And then what happened, sometime shortly after that, a woman shows up in my office who I know from my past life, from my New World days. She shows up in my office with the movie rights to Viktor Frankl's book, Man's Search for Meaning, a book that I was aware of but had never read. I had no interest in making a movie, but it did cause me to read it. And I said, wow, this really ties in with my idea of the linkage of meaning in life and purpose and fulfillment. It really got me thinking quite a bit about it. For those who aren't aware, that book is, I think, on the Library of Congress's 10 most influential books ever published in the United States. I am sure I'm the largest purchaser of it because as I go around on Working Nation meetings, like this week in New York, I probably promised at least 10 to people I met with this week. And for those who have not read it, sorry I can't send it to you, but you can go buy it from Amazon or whoever else. But it's a fabulous, quick read, and it's really an eye-opener. What then happened during the first quarter of 16, I turned on the TV show Morning Joe, and Steve Ratner, the investment and economics guy who's on the show frequently, first chart showed how life expectancy of white males had begun to decline for the first time in history. And then the second chart showed causes and showed a major spike up in addiction and suicide. And I said, okay, how does that tie in with what's going on here and the pain that really does exist out there in society? And then Nicholas Eberstadt of the American Enterprise Institute during the second quarter of 16 heard about what I was doing. He had recently written a book, Men Without Work. And I met with him in Washington at one point when I was there, and he had a statistic, something like 16% of the white working age males, and that's defined 25 to 54, are either unemployed, underemployed, or have withdrawn from the workforce. Well, that's very different than what people were talking about, going back to the point about the unemployment rate.
Right.
And then, a couple months later, we all watched both the Donald Trump and the Bernie Sanders movements explode that summer. And to me, it was a no-brainer. I said, there are millions of people in this country that are in pain, either economic pain or emotional pain, purpose in life pain. Might be themselves, it might be other family members, other friends in the community, but there are millions of people in pain. And I really believe when we look at out across the political environment, what has gone on since then, very few talk about how, blame a lot of the stuff on the political environment. But so few talk about what underlies the political environment. And I really believe, there are other things besides the stuff I'm focused on, but I do think the stuff I'm focused on is a pretty key part of what's driving the political environment.
So looking down the road, I guess it's that, we've always had technological change, but that now it's happening faster, and that's leading to more displacement, which is leading people to lose their purpose in life. And if you look out, 20 or 30 or 50 years, if this trend continues, I guess to me, there, either people have to find new work in the, post-agrarian period, or, whatever you want to call it, or people have to find other ways to, to find their purpose in life and to find meaning without work.
Let me give you actually what I think is maybe the toughest piece of the entire equation. I mentioned, the way I usually talk about it is three motivations for me and for Working Nation. One was the slope of the curve. Two, as I addressed, this time it's about the heart of America and how the bottom 20% will become the bottom 30%, and the bottom 40%, and 50%. The third one, and I think is the toughest one, is never before have we had to reskill and re-educate all the 48-year-olds. And I'm using 48 generically to cover 30 people in their 30s, 40s, 50s, 60s. And that is a very tricky thing. It's one thing to be able to educate, young children and, up right through, college and community college. Also, the whole idea of instilling lifelong learning mentality in people. When I speak to big K through 12 educational groups, I tell them, look, you don't need me to talk about STEM education. You hear enough about that. I'm not an educator, so I can't really offer you a lot. But the one thing I will offer you is I think one of the most important, if not the most important things you can do with young students is instill in them the idea of lifelong learning. Because I don't care who you are, no one's going into a job and staying there for 35 years without radical changes in that, or the fact that they're going to be going into a lot of different jobs over time. So lifelong learning is, I think, a very, very important piece of the equation, which you can, work with young people. But boy, starting out with that 48-year-old who, finished high school at the age of 18, and that was 30 years ago was the last time they sat in a classroom. So I think that's really one of the toughest pieces of this whole equation.
So I want to close by looking back at the investment and finance world. So since you started 50 years ago as a runner.
Oh, don't make me sound so old.
Well, people can do the math themselves. They'll leave that out.
I should have told you I was a runner in 1990.
Yeah. So, and all the changes you've seen in the financial world and frankly have helped to affect some of them, how does that make you look at the world of finance differently, either from the perspective of someone who's maybe entering the industry now or of an investor who's trying to find their way and find something that works for them? I mean, the field of investment is not immune from these high sloping changes either.
I think this has dramatic implications on the investment world. And I'm not sure that it's, as I said earlier, I don't think it's really understood to a meaningful degree. I am being invited now to speak. Actually, I'm coming back in 2 weeks, 3 weeks, to an investment firm. Heard about what I was doing. They want me to come and speak to as many of their people who want to come hear it. I was probably a couple of years ago a major foundation who I know one of the trustees well. All of a sudden, I get an email from the chief investment officer of the foundation. And we get on the phone. I was out of the country when we got back. I get on the phone with her, and she says, Art, I'd like you to come present to the investment committee of our foundation because the stuff that you're talking about can have broad implications for the investment world. So anyway, an example I always use is activist hedge fund guy who I know well. And I was sitting and having lunch with him. This was about 3 years ago. And we were I laid all the, a lot of this out to him. 6 months later, I looked at his portfolio and there were 2 positions missing. And I said, Matt, what happened to when we were together again? Why are those 2 positions gone? And he said, Art, because I had lunch with you. And basically it was it was the stock of 2 middle-class restaurant chains. Mm-hmm. And his logic was, if the middle class is getting squeezed economically, mm-hmm. One of the easy things you can do without is an extra meal, out with the family or, friends or whatever. Can't do without oxygen, but, an extra meal at a restaurant chain you can do without. So I do think there are, much broader implications out there. Now, I think at the same time, there's also some really interesting opportunities. Give you one area that I'm focused on from an investment standpoint is the whole area, continuing in the whole area of education, technology, and training. I'm searching for that augmented reality or virtual reality technology solutions to focus on training and education. Because going back to my comment about the 48-year-old, you're not putting him back in a classroom.
Right.
Maybe through these really interesting type technologies, we might be able to do something. I remember the first time I put on augmented reality goggles, and I was taught how to install all of the plumbing fixtures in a bathroom. So now I don't need a plumber anymore.
All right. I think we'll leave it with that. Art, thank you so much for sitting down with us today. It's a really interesting
Thank you.
story.
Thank you for having me. This is great. Thanks for the opportunity.